I am Shreya Suresh. I am a senior finance associate at DebtWorks. We are a debt consulting and an aggregating platform. We are looking to provide secured and unsecured, lines of credit to startups across sectors, be it tech, be it QSR, e-commerce, other FMCG products. We're completely sector agnostic. We're looking to help startup founders understand that debt is a pretty how do I say, it's actually a growth aggregating channel as well. So reach out to me on LinkedIn. I'm available there. Sure. So Shreya Suresh, you can find me under Shreya Suresh, senior finance associate at DebtWorks.
How do you evaluate which startup to lend to?
Right. So we majorly look for a few criteria. We are focusing on revenue and growth phase startups, where at least they have 1 year of GST sales, and they have a good runway of up to 8 to 12 months. And they have a really good cash flow in bank. We look at their strategies in place. We look at what kind of markets they're looking at, what are the financial projections. So if those got good fundamentals, we go for it.
What about the collateral?
Collaterals again, right? See, we specialize in secured and unsecured both. So, secured we only look for, again, it depends case to cases. It can be a manufacturing setup, it can be a factory, it can be houses, depends on that. But we are specializing on unsecured as well, so that founders don't have this pressure of providing this collateral. So that's where we come in as a completely differentiating player, where we have customized solutions catering to that particular startup problem. We do a lot of hybrid models, if not like, for example, we do try to bring in working capital, facility along with an asset leasing. So we try to do a lot of hybrid innovative solutions, which is why we want to, we are standing out when we're trying to reach out to founders as well.
Why should startup founders consider debt as an option?
Well, in the market, the perspective of debt has been, pretty shaky. But coming to understanding debt is quite challenging. In terms of growth, let's take a manufacturing facility for example. They have all their assets of their machinery, equipment, everything on their books, which in a financial standpoint might not be that lucrative. And having debt in place, let's say we come in as an debt financing partner, and I get you in certain asset leasing options where you can free up your cash flows, which will eventually further go in for either operational efficiencies, or you can go in ahead and raise more equity on that basis. So debt is a really good way to look at certain capital heavy and asset heavy transactions or asset heavy operations you're looking at. Overall, I would say debt is also fueling your growth and fueling your this vision of the startup. The only thing is we're not taking any equity out of it, so you still have your controlling controlling power of your entire startup and vision as well. So in a nutshell, I would say debt is also a player that is purely focused on fueling your vision further, more than getting something in return as a capital or ownership.
Who can approach you? What ticket size are you focusing on?
So, like I mentioned, we are looking at somewhere in the revenue and growth phase startups, and ticket sizes we do something as small as 50 to 60 lakhs to upwards of 50-60 crores as well. So that is the complete bracket, completely sector agnostic, and feel free to approach.
How is your experience of Bangalore Slush?
Bangalore Slush has been great, great event, great crowd, really good amount of people coming in. Good setting. I think it's been so far very, very interactive and quite eventful.